This is David Patrick, Fitzstock Charts, weekend market analysis for March 30th, 2019. Charts while you sleep, week 13. And we are in a 6-day downtrend, depending on where we close on Friday. That is when we preserve our capital. We've been talking about this for weeks now. When we go into downtrends, when we go into no trends, we preserve capital. We preserve year-to-date gains. That's our priority. There's just too much money to be made in uptrends to give it away and waste it away with lower odds trades. We've talked about it over and over again, but it took me a long time to realize it early in my career. I always felt that the more quantity of hours you put into it with the research, following people, knowing all the fundamental analysis, understanding earnings, understanding economic numbers, trying to interpret that, all those things involve opinions. All opinions equal emotions. All emotions equal trading losses. Only trade price. Stick with the trend, and we trade uptrends. That's when we make our money. We're going to go over 1998 historical chart pattern comparison. First quarter is over. We talked about possible first quarter quarter-end markups. They didn't happen. No, they didn't happen as of Friday around noon. And that's why you trade price. You don't trade a trend in the market, meaning the week before OPEX, market often hits pivotal lows. You can't just get long if you don't have rules of engagement on the pullback. You have to wait for rules to engage back above the 10 SMA. Just like quarter end. There was a higher than 50-50 odds that you would see a markup at the quarter end. Well, it hasn't happened yet. It doesn't matter. There's no rules to engage long. So it keeps you out of trouble. These are market patterns, not price patterns that happened. There's a big difference. And we'll go over those throughout the year. I currently have 35% long market exposure. I have some weekly calls. I believe expire Wednesday next week. By Tuesday, if we don't see rules to engage back above the 10 SMA, I liquidate those SPY calls. If we do, I'm going to exercise those SPY calls and become 85% long market exposure with 50% long market allocation to spiders. Okay, I haven't done this ever, and we launched the service back in 2013, but I find myself trying to help as many people as possible, and I want it to be an equal opportunity to everyone. Because I have had some consultations. First of all, since I started the service, you were able to purchase consultations from the website. Annual subscribers receive a free 30-minute consultation. With that said, there's a lot of subscribers that are monthly. And there's a lot of subscribers that might come and go because they don't understand the methodology. So what I'm doing in the month of April is if you email me and you want to spend 5 minutes over the phone, you had some questions you want me to clear up, or you want me to explain the methodology, or you want me to talk about your trades, investments, or anything for 5 minutes, I'm going to make time because I want everyone to understand what's going on with our trading methodology and how to make money with it. All right, let's get into, and by the way, trial and error. I mean, you go back to when I first started trading, a lot of it was trial and error. So right now I'm going through a lot of trial and error with these microphones, with my video. I'm buying new software, it seems like, every day to try to get something a little bit better. I'm obviously not a video guy. I'm a trader, and I'm not really a tech guy. I've improved my website, and I still have to improve it more. And I appreciate your patience with that because we still have some lag. I'm still working on the image optimization and things like that in between a zillion other things, but I do appreciate your patience with that. Okay, our 90% club, 81 different options this year that are up over 90%. 29 triplers, 288 triplers since we launched, 1,023 options up over 90% since we launched the service back in 2013. And we had our first short that paid in the 90% club in a long time. Let's just scroll through here. When was the last time? December 19th. Oh, that rings a bell. Remember all cash? I went all cash in October of 2018. Well, we did have some puts that paid in December and October and November. And is this the beginning of something big? We don't know. We're not going to try to predict it. All we do know is we're in a downtrend until we're not in a downtrend. And when we have rules to engage, and I want to make this real clear because a subscriber, yeah, let me write that down before I forget. ROE versus uptrend. All right, so I don't forget that. I like to write things down. Real fast. So the website, yeah, it's laggy still. Depends on when you log in and how much optimization I'm going on in my back end with optimizing these pixels to shrink them down to not bog down the servers. But anyway, it's a long tech thing, and I don't even understand half of it. But that's what I'm working on. With that said, the homepage, you know, you can see it's added some visualization. What you're basically going to be using in your subscriber, you're never going to be on the homepage. What are you going to be on the homepage for? You're going to be on the subscriber page, maybe the blog page. And the blogs are basically the S&P 500 and NASDAQ close. You get those on Twitter. So 99% of the service is really the emails, the engagement spreadsheet focus list, the market video updates, Twitter. And then, you know, the website is there as, you know, sort of a background of what we do and educational videos. But anyway, obviously under subscribers, for new subscribers, it's very valuable, right? Because you have all this new information. And by the way, I'm going to be doing all these videos on, you know, basically our trading rules and there's YouTube videos, there's educational posts. There was some live trading going on with Apple. If you remember those videos, 5-minute rules of engagement video. And then we have the blog. And so, you know, these pictures that are up here, these are being optimized right now to speed up the website. So I don't want to spend too much time on that, but I just want you to let you know I'm spending a lot of time to try to improve the quality of the website, the videos, and things like that. And then obviously the focus of the service is the trading. And that's the most important thing. And since we're in a downtrend, I do have some downtime because I'm not over trading. And I hope you're not either. So before we get to the rules of engagement versus an uptrend, let's look at the historical chart pattern comparison to 1998. So we talked about the golden cross after the death cross, right? Market tanked. We saw this thing coming. We went to cash. Well, at least I did, and posted it. Now what are we doing? Well, you have the golden cross. Here's the Dow diamonds on the right. The 50 through the 200. We held the 50, and we held the 50 through the 200 here. So the Dow diamonds actually have rules to engage long, and they do look to go higher. So I think, you know, if there's going to be a next trade long besides my spiders and possibly adding to my Qs, and you know I'm long Apple, Dow diamonds look good, and UDow is triple long, so that could be, you know, a possibility too. MACD is flattening; it hasn't crossed yet. I have a feeling by the time it crosses, you're going to be way up here. You're going to miss a bunch. So, you know, that's the historical chart pattern comparison. We're about right here with it. See right here where my cursor is? We could be right there. So we haven't diverged yet. Remember, all historical chart pattern comparisons diverge. And some of them last weeks, some of them last months. So let's get into, before we get into 5-minute rules of engagement, let me change the time frame here. I'm hoping that this video turns out a little bit better with the audio and the clarity of the picture. So anyway, this is a 3-month chart of the S&P 500. You can see there's your golden cross. You have rules of engage above the 10 SMA, MACD's curling back up. So someone a subscriber who's been with me a long time had emailed me this, so this is why I have to go over it again, just to make sure we're all clear. A rule to engage, we have many of them. All you need is one. Okay, all you need is price. You know, another subscriber today mentioned about volume on JOBS, which engaged. You don't need volume, and we talked about this over and over again. All you need is price. And oftentimes, volume is hidden inside options anyway. You don't even see it. So with that said, a rule to engage, our number one rule to gauge, is price above 10 simple moving average, right? Well, we have that right now. So you do have rules to engage. Now, a close above it is even more powerful, obviously, because it's going to give you higher odds. You can see we went above the 10 SMA right in here, and if you know, you could have got stuck. So ideally, you would like to see a close above. Now, Anytime you're above the 10 SMA, you have rules to engage. A close above is going to give you a higher odds trade. Now, the next higher probability is if we see two closes, which puts us in an uptrend, and then even a higher probability if we see those two closes with MACD headed in the right direction. And preferably MACD is above the zero line, doesn't have to be, and a MACD bull cross. Now, what is our perfect trade or our best setup? We've talked about that over and over again. It's a bull flag to new highs, a bull flag above a break of a downtrend line. So to give you two of them that happened, well, right here. Here is a break of a downtrend line, and here is a bull flag, right? And there is MACD bull cross, and that's our number one trade setup, right? You could say the same thing about number one bear trade setup, which is when I went all cash, is a break of an uptrend line and a bear flag below, and then you see that. So I was aggressively long in here, and obviously I was cash back in there. You don't have to short the market. I've talked about it over and over again. If you're aggressive, you're super aggressive, you can take ESFL entries. We're in downtrends and no trends. You don't need to. Number one priority is what? Preservation of capital, preservation of year-to-date gains. That's when most average traders lose their money. So we're not going to talk about 5-minute rules of engagement today. We're going to get right back into the market here. I think we're 11 minutes and I have this new software here, so I got to get used to reading it. So, all right, here's the NASDAQ. NASDAQ looks identical to the S&P. There's not really much to talk about. We haven't seen the golden cross yet, but the price action looks almost identical. Let's see what oil futures are doing. They're grinding higher. XLE, and it hasn't moved in 2 months, and price has, and the MACD hasn't moved in 2 months. It's a tough trade. Let's look at financials. We talked about in the market video update midweek that this was going to come down, maybe touch the bottom of the wedge or come close, and it's going to come right back. And that's exactly what it's doing. Unfortunately, we got stopped out on a Bank of America when this happened. And, oh, by the way, I did have the statistics. I wrote them down, I believe. 128 stocks have engaged this year. 10 losers. 6 no scales. 112 winners, which I believe, yeah, let's see if I could just do the math. I can't, thought I was smarter than that. Oops. I don't know what all that stuff is. What is that? What I say? 112 divided by 128. And I'm not a good typer. 87%. So right now, I mean, it's credible. 87% win rate. And if some of those no scales turn into wins, you're talking close to 90% again, which is, it's absolutely unheard of. So let's look at IWM. It has rules to engage. And another thing I might consider starting doing the video is maybe looking at 3-month charts. It's easier to look at these, but I want to show where we've been too. You see a death cross and things like that. So anyway, the price is right there. Price is above the 10 SMA. It's not leading. I still like the NASDAQ. I like the Dow Jones a lot, to be honest with you. And I'm probably going to put that trade on. IYT looks pretty good. And we need some leadership. So we don't have it in the banks. We don't really have it in the energy. Transports are in an uptrend. What's an uptrend? 2-day close above the 10 SMA. Second day close higher than the first day's intraday high. That's an uptrend. MACD bull cross. That's interesting. IBB. That's a wedge pattern just like the XLF. It's very, very difficult to trade. And I don't see too much to do there. UDOW looks very good. I think UDOW goes back to 100. And then I think we're going higher in UDOW. Gold, sloppy, gaps everywhere. Stay away. You know I've been bullish bonds. This is another bull flag. This is a bull flag above a bull flag above a bull flag. This one might not work. Why? Bonds usually don't run like Amazon or Apple. Usually they come back and fill. And it's very possible we could come back and fill before we go higher in bonds. And we got to remember, those options and bonds were up, what, 130% or something like that? It's maybe even more. I think it was maybe 150%. It's insane. Insane. The return on just bonds, the bond options that engage from our engagement spreadsheet focus list. Imagine that. Okay, Apple. I got some Fibonacci extensions up here that we were possibly going to get to 200, 207, 205. We got gaps up here to fill. The problem with Apple is that obviously it paid us fat. By the way, this was in the 90% club twice a few weeks ago. Twice. Xilinx was in it like 3 times a few weeks back. Why? Is because we add on price strength confirmation. And we keep adding. After we scale, we add. With that said, the problem with Apple is look at MACD. It's MACD bear cross. It's heading sideways with price. It's lost the momentum. So I'm long Apple. I'm up, still huge on it. I think from 177. I'm just letting it be. It's either going to get stopped or it's going to run back, to highs of the year. But for a new trade, it's tough. Amazon looks better for a new trade. Bull flag above a rising 10 SMA through the 200. See this? Looks better. I think it looks better. Netflix, that looks sloppy. MACD is at 2-month lows. So there's no momentum there. Booking, nothing. Expedia, nothing. Those things haven't done anything forever. Tesla was on the ESFL today. Bull flag above a downtrend line. MACD bull cross. I think it could squeeze $300 pretty easy. Don't love that trade, but it looks like a higher odds trade. Facebook, MACD's at 2-month lows. There's no momentum in anything. So far, Amazon looks the best of the FANGs. Google, bear flag below a downtrend line. Simple downtrend line. Bear flag below MACD's at multi-week lows. There's no momentum there in any of the FANG besides possibly Amazon. Nvidia paid huge last time. I just wouldn't add up here. Intel's getting sloppy. It still looks fine. Texas Instruments, someone had mentioned Avgo today, hit new highs the other day. Avgo looks really good. So Amazon and Avgo, Nvidia looks all right, but those are the only two I think that look like new setups. Light looks like a new setup, long. Xilinx looks okay. MACD is just not good. So we have three winners so far for new setups this week, or at least look like they could be winners. Microsoft, sideways action. It's just resting. There's no momentum. Oracle does look good. It needs MACD, but that does look good. I would say that's a 4th one. Adobe looks good. MACD bull cross. That's our 5th one. Coop just resting. Now, CRM. Now it looks actually pretty good. Needs some momentum. Now could be the 6th. JOBS, we talked about this. Someone had said no volume. It doesn't need volume. Volume could be in options. It doesn't matter anyway. This is this gap up here. It's probably going to take its good old time getting to $90, but that's probably the price, a good price projection for that one. Splunk, we got paid on the short on Splunk. Now it's coming back. So this thing could be setting up long for a nice short squeeze. So we got to keep an eye on Splunk now. FFIV, that one looks like a long setup. You got a simple break of a downtrend line here. Bull flagging above, MACD bull cross. That's the 7th long that looks like it's setting up for this week. Twitter, slow. Roku, I don't see too much. Let's check out some China names. Baba, Baidu. Let's flip over to Workday real fast. CYBR. Ooh, CYBR looks really good. MACD's just not doing anything, but that one looks like an 8th one that might be setting up. Panwa, VMW, Vive. Vive looks really good. That's the 8th one. eBay, YY. YY actually looks pretty decent. MACD's curling back up. That's not too bad. I think it's the 9th stock I mentioned that could possibly lead us higher this coming week. Shop looks good. MACD doesn't look good, though. Box, nothing going on there. What is going on with GoDaddy? By the way, GoDaddy's my provider, and I'm not super happy with them because I just don't think they have the fastest service out there. But with that said, you do have this golden cross coming, and we're going to have to wait to see if MACD picks up. Let's check out Wix, competitor of theirs. Filled that gap we talked about. Once you fill gap, it slows down. I think once it regathers steam, I think Wix might actually outperform GoDaddy, but we're just going to have to wait and see. Let's check out banks. I know they didn't pay the last time around. They do look like they're setting up for a short squeeze. MasterCard and Visa do look the best in that sector. PayPal looks pretty good too. I probably would not put my money in that sector. I'm just more aggressive. CME, we talked about this one's looked bearish for a while. It does have the death cross coming. A lot of times when that happens, you rip up to test that. You short squeeze to the death cross. You fail, and you either create a higher low and then start an uptrend, or maybe a double bottom, or you just completely fail. So you really want to see how this one reacts to that declining 50 SMA. Maybe it goes lower. Maybe it does a double bottom. Maybe it does a higher low and then starts an uptrend. You have to keep an open mind for this. Just because this thing has looked bearish for a long time doesn't mean it's going to continue on the downtrend. So it's to me, if you haven't shorted it, it's too late to short. So that's just my 2 cents there. Tilray, let's look at cannabis. I guess I would have to type in the right symbol first. That's not telling us anything. Kronos, CGC. There's nothing going on with that sector. Let's flip to oil. Man, we got some sleepers here. I mean, PSX actually looks like it's rolling over. That looks lower. Exxon looks good. But the problem with these right now is unless the momentum's heading like, I don't want to say 90-degree up, let's say 45-degree up. Unless it's heading up that kind of angle, these are really tough to trade. They just back and fill. They go up, they go back down, they go up. They're just not good trades along with the banks right now. I would avoid them. Let's see if biotech, Amgen, it's just sloppy. Gilead, Jazz looks pretty good. Lexion, it's pausing. I still like it. It's just the moment. There's no momentum there. ISRG. I like this one. I think this one could end up turning as a cup and handle pattern. I mean, if you look 6 months out, I still think that one goes higher. REGN. Its problem is it's got big resistance at the 50 SMA. X-ray. That one looks good. It's got the 200 SMA. If that 200 SMA wasn't there, that would look really good. CMG just, man, that thing just goes up every day. That is absolutely crazy. We got paid huge. And that one we added to. Twillo lost some momentum. Tell you what, Monster's got some competition with this new Bang drink too. I don't think they're public, but a lot of people are drinking that new Bang drink. I think it's got a bunch of stuff in it. Anyway, let's finish with what's going on with the S&P. All right. We've talked about this over and over again. We had an uptrend, 40-day uptrend. We had a 10-day uptrend. We pulled back here. Remember when we pulled back there, that was a week before option expiration. We talked about often hit pivotal lows. We used that as our line in the sand for any long-term positions that we were still green on. And then the next month, we did another pivotal low. Imagine that. One of these months, by the way, we're not going to do a pivotal low. We're either going to just blow through it or we're not going to pull back at all because you can't do the same thing every single month. Now, since then, what do we have? We have a golden cross, which we looked at historical chart pattern comparison, suggesting this is bullish. I'm 35% long market exposure, and I probably will exercise my spider calls to get 85% long market exposure. And then I'm looking at either UDOW or adding to QQQ to get back to 100 or more long market exposure. The problem with this is, as I think, and I hope I'm wrong, I think the easy money was here and here. I think this next uptrend could be tricky where you just come right back up, blow out highs, and trick people. And I wish I could go back, and I will, just to see. We looked at the Dow just to see how the S&P handled itself back in 1998. I know it was similar, but since we're just going to close things out here. So once you saw this golden cross, you came up like right in here. Actually, no, here's the golden cross. So back in 1998, and this is interesting because the S&P actually ripped to new highs. Well, that's interesting. So I guess if you're looking at the S&P, it could be a huge catalyst going forward. So that's another reason why. That's what's nice about options is I put those spider calls on and I had scaled 3/4. I kept enough on where I could get long because the options can get you leveraged long because you buy 100 calls and you got 25 left, 2,500 shares of the spiders. Just as an example, that's a decent sized trade or investment. So with that said, looking at this, which I hadn't yet, looking at those the S&P back for the historical chart pattern comparison, this could be quite a catalyst. So you already know what I'm going to say, right? When downtrends and no trends, preserve money. When we have rules to engage, which we do right now, you can get long or longer. If we go in an uptrend, because if we close here, we're in no trend. If we go in an uptrend on Monday, keep allocating more long risk exposure. I still would use this as your stop. If you start putting in tight stops, I think you're going to get whipped around. All right. So just in closure here, if we go on an uptrend, I probably would get long earlier. We have rules of engage. Monday, I probably would look to add, or Friday at the close if we're above the 10 SMA. That's your line in the sand right there. 27.22. Use it. So if that, figure out what your risk is, and March 8th lows on whatever you put it in. If it's SPXL, TKQQ, Amazon, Apple, whatever it is, that's your risk. I don't want to see you get whipped around. Okay. Now, if you're a hybrid trader and you just don't want to put on that kind of swing position, then I would probably use this week's lows. This week's lows is your stop for any new position. So you know all my entries usually before they happen. So you know my entries, you know my scales, you know my stops, and you know what my opinion is. My opinion is only based on price pattern, and trend. So you already know what my take on the market is. If we close here, well, you know I've been bullish because we have a historical chart pattern comparison that's bullish. We have a weekly, by the way, it's flipped to weekly real fast, that's bullish. So although we were in a downtrend, you knew I stayed long, and well, I stayed at least slightly long because I was bullish because of numerous reasons. The weekly, this is our weekly. The weekly remains bullish, and we still have that historical chart pattern comparison that's bullish. So I had reasons to stay long. I wasn't ultra long. I like to be ultra long in uptrends. What's ultra long? At least 100% long market exposure. That's all I have for you on the weekend market analysis, charts while you sleep, week 13. Have a great weekend.